Good morning. This webinar offers closed captioning. Welcome to the City of Chicago Department of Business Affairs and Consumer Protection's free business education webinar. This webinar is being recorded and will be available at youtube.com/ChicagoBACP. There will be a Q&A session at the end of the presentation. All BACP webinars are part of the BACP Entrepreneur Certificate program, which is a free program for anyone interested in starting or growing a business in Chicago. Getting your certificate is as easy as 1, 2, 3. 1. Register for the program. 2. Attend 6 webinars in 6 months. 3. Graduate to get your certificate. Graduating makes you eligible to apply for CIBC Bank's Entrepreneurial Loan Program. Note that you must already be registered for the program to get credit for attending today's webinar. For full details, visit Chicago.gov/BACPCertificate. Views, information, and opinions expressed during this webinar are those of the presenter and are not the official policy or position of the City of Chicago or BACP. The information mentioned will be posted in the chat box. Today's webinar will be Creating a Financial Narrative, Positioning Your Company for Growth, presented by the National Association of Women Owners, NAWBO Chicago member Noelle Curtis, founder and CEO of Bisi Blvd, Inc. Noelle?
I am here. Thank you so much. Good morning, everyone. Hopefully, you can hear me loud and clear. I'm about to share my screen. And as Geraldine mentioned, the recording for this, you all can pull it from the YouTube channel that she mentioned. This is an excerpt of a much longer class that I present through Bisi Blvd. So you'll have information at the end of the presentation on how you keep in contact with me, which I absolutely hope you do. So, we're going to dive right on in, and we are going to talk about how you create your financial narrative for business growth. And this is just in alignment with storytelling. A lot of entrepreneurs on the line. I'm sure there's tons of excitement in what you're doing for your companies, but we want to make sure that you have, so a general narrative that you can share. So the way we'll flow today, I will ping pong questions throughout. We'll be monitoring the chat box for questions. And if you don't hear it answered in the information as I'm presenting it, as I'll acknowledge whether it's coming up in a little bit further in the presentation. So the objective of this entire course, again, this is just an excerpt, is that you are able to name and identify financial narratives, one, as you see them in everyday life. So financial narratives are all around us. Companies put it and use it in media. They use it with their social media posts. They use it actually in print of interviews and things for financial publications. We want you to be able to describe the importance of planning your financial goals with your company, a little bit of how you create a forecast and tracking some of your key business metrics. You want to be able to absolutely examine the effectiveness of the financial narrative as you're sharing it in your particular industry. And then lastly, we're going to give you the prompts you actually can use to compose and evaluate your financial narrative. And of course, I'll talk about Bisi Blvd just a little bit. This is not an infomercial. At the end of the day, this really is presented with the intent that you will position your company for better growth. The financial narrative exercise has been extremely beneficial in my life. I am a business influencer. I have helped individuals across the city of Chicago and actually nationally access over $2 million worth of funding. And it's really important that for me, as I present this information, you are understanding it in a more community-friendly and actionable way. And you'll see how I mean by that moving on. So what is a financial narrative? I'm going to tell you, you should grab a pen and paper because I'm going to drop a couple of different definitions and formulas and key takeaways throughout this presentation. But a financial narrative essentially provides the context and interpretation of your company's current financial information in a way that you're able to share it with stakeholders. And the reason you want to do that is because you want to be able to show your past performance, your present performance, as well as your future performance for your company from a financial perspective. Now, when we talk about context and meaning, we want to make sure, one, that you as the company owner know what the message is you're trying to communicate. Two, the financial narrative is going to be the bridge. It's going to take all these different financial data points from out of your company. There'll be financial, there'll be customer related, there'll be marketing, all these different data points, and put them in a cohesive paragraph that you're able to share that's attached to your company's strategic vision. Now, the strategic vision is important, and I am making some generalizations here that one, you all on the line have created a strategic vision for your company, right? Where is it that you want to go? Because the financial narrative will help you monitor that growth and that track along the way. It's going to keep you on task, and it's going to show to your potential investors as you are talking to the loan officer at CIBC or any other individual who has the ability to somehow interject uh, dollars into your company. This narrative is going to be a key element in those conversations. So, to distill it down, a financial narrative is the bridge between the raw data of financial statements for your company and the strategic vision. Why do financial narratives matter? You can see right here at the top, a well-crafted narrative will influence investor decisions. It's going to shape your company's performance and perceptions, and it's going to build stakeholder trust and confidence. And how does that show up? If you are currently, and I just realized I didn't start my timer here, so give me a second. I'm supposed to be timing myself. Um, Sorry, let's see. Count down here. There we go. Okay. If you are, sorry, your current status in your company, one, you should absolutely have your financials of your company in place. And when I talk about financials, I'm talking about, yes, your balance sheet, your cash flow statement, your profit and loss statement. These three elements are naturally going to be asked to be seen on a regular basis. If you are looking to secure funding in your company, it's going to be critical for you to be able to present that, excuse me, internally, you'll be able to make more distinct decisions for your company's growth. And this is something I even this week had to put in place, right? We've had to adjust vendor contracts, employee status. Those decisions were easier for me to make because I have my financial narrative to go from. And then lastly, it's going to really highlight some of your business outcomes. What is it that you are trying to achieve? It's going to be a time-bound measurement, and it's also going to have you stay on track with goals that you're trying to achieve from a financial growth perspective. So everything that we're talking about is how are you growing your revenue within your company? That financial narrative is going to help you keep on pace with that, and you'll be able to make better reasoning decisions as you are needing to spend dollars, needing to access dollars. Do you need to cut back on contracts? Are you able to increase on certain contracts? Your financial narrative is going to give you a sounding board and a clear understanding of what things you can actually do. Now, where would you actually use this financial narrative? That's always key. You're going to use it for yourself first and foremost. If you are a corporation, you do have to have like your quarterly earnings calls and your final annual call. You will be able to share a financial narrative. It's going to take you a long time to create it, but it comes down to like a 3-minute statement. But the audience on the other side, who are you going to share this with? We share our financial narrative with our investors. We share it internally among our management and leadership team, and then they are able to take portions of that and share it with their individual working teams. So the marketing department can share the financial narrative in its own way specific to marketing. The customer success department can share our financial narrative in a way that impacts the customer success department. And then the investors or any funders or banking relationships that we're having conversations with, they're able to also take our financial narrative into the back room and offices of additional conversations that need to be had from a access of capital perspective. So again, the financial narrative is going to show what's happening within your company and what your company wants to tell the market about their business. And the reason I say market is because oftentimes you'll see financial narratives. You can see it on Bloomberg, CNN, Chicago Tonight. Financial narratives are all around, but if you don't really know what you're honing into as you hear these financial narratives, sometimes it won't be as impactful to you. But now, hopefully by the end of this workshop, you'll have a better understanding of a financial narrative. And so you'll be able to hear a lot of different presentations and articles that you read with a different, more keen financial analytic perspective. Now, we'll talk about an example of a financial narrative in the media. Now, a lot of you may know my original, I would say my biggest business focus of my career was in the beauty and wellness space. I had a day spa for over 10 years on Chicago's West Side. And so a lot of my presentation today will be from a beauty centered focus. However, a financial narrative is industry agnostic. Every single person on here who has a company, who sits in a decision-making seat as a CEO or as the owner or as the founder, it doesn't matter whether you're selling shoelaces or whether you're selling water bottles, whether you're selling a beauty product, you need a financial narrative. This one for today's example, though, we'll talk about the financial narrative that was put forth from Estee Lauder and Carol's daughter and the media coverage that came from it. So Estee Lauder had an acquisition of Carol's daughter. And for those of you who all don't know, Carol's daughter was a hair care brand founded by Lisa Price in Brooklyn in 1993. It was acquired by L'Oreal in 2014. And I know you're like, oh, 2014, how does that impact 2025? You will see. Um, at the time, Lisa Price and Carol's daughter, she had self-funded and made a huge name for herself amongst the music hip hop community. She had private investors like Beyonce and Jay-Z and a lot of the New York residents. She was also a former writer on The Cosby Show, which a lot of people don't realize. So she self-funded the development of this hair care product, which was stemmed from a recipe from her grandmother, but she took the time to grow at a steady and intentional pace. If you listen to any of her interviews, she will mention how she only did things that she could afford to do out of her own financial positioning. So self-funded. Could she afford to go to a trade show? Only if she could pay for it out of her check did she go and do it. So she did a lot of things literally from her kitchen. And there's several articles and interviews where she talks about how people would just like come up to the back door or come to the front door, and she'd have all of these kind of Tupperware type parties, but for hair care in her living room and in her kitchen. Now, from that, it stemmed into a multi-million-dollar company. And she got a lot of flack when she did it. She was acquired by Estee Lauder. One of the things, I mean, L'Oreal, one of the things that was upsetting to a lot of people from this acquisition was that they thought, as a woman of color building a brand that had not been historically seen before, that she was turning her back on the community. But the financial narrative, Carol's daughter sold to an independent entrepreneur after a decade under L'Oreal's US ownership. She wound up being acquired. But what is this headline telling us? She was a brand, it was independent, entrepreneurial based, and she actually bought her company back from L'Oreal after a while. But the important thing was in the media, they positioned the acquisition of the company in a way that um, it left her with market share, but it also impacted the L'Oreal conversation as well. It was transitioning from being a subsidiary of L'Oreal to becoming independently owned again, backed by by its owner. And so when that transition happened, it was really quick. Like she sold her company to this big company, right? That's the dream from a VC perspective. You get a brand, you grow a brand, it gets acquired. But what happened after it got acquired by L'Oreal was that L'Oreal had other focuses, and Lisa felt that Carol's daughter was not getting the appropriate attention that L'Oreal should be presenting for her brand. And so she wanted to buy it back, which she was able to do. It was better positioned to be in the USA L'Oreal brand portfolio, but she still wanted to have a better narrative from a financial position within the media. So that's an example of how a financial narrative can show up, right? That's a very brief financial narrative. We're going to give you one that's a bit more elaborate, and I'm going to show you how these items are pulled. Now, as I mentioned at the top of this, to create a financial narrative, there are absolute dependencies that have to be in place. You have to have your balance sheet in place. You have to have your income statement and your cash flow statement in place. Now, as you can see here, some of this might be repetitive for you. And if it is, great. You should be able to lock it in and know, oh, yes, I have my balance sheet. Is it up to date? The balance sheet provides the stakeholders with a snapshot in time, your assets, liabilities, and the equity. Now you can pull your balance sheet at any time of the day, but a balance sheet literally is constantly moving. Your balance sheet on Monday morning could look totally different by Friday afternoon. And that's because of how dollars move in and out of your company, if you're paying off debts or anything of that nature. A statement of shareholders' equity. This one is going to be more if you are a corporation, if you have shares within your company, you want to have that. I'm not going to, lean into that one too much because I don't know the environment of the entities on the line. But the income statement, you're absolutely going to have in place. It's an overview of your company's revenues and expenses, and it shows, did you actually make money? That's what's so important about the profit and loss and income statement, which are the same. You'll hear it say profit and loss statement or income statement. It's the same one. At the end of the day, the income, hello, profit or loss, it tells you right there in its title. Did the company make money? Did the company have profit or did the company have loss? If it had profit, it's income. Even if it's at a loss, right, it's still going to show up on this income statement. And then the third one that you absolutely want to have in place is your cash flow statement. So that cash flow statement, it tracks the movement of cash in and out of the business, and it shows whether you are doing heavy spending, easy spending. I recommend and advise everyone to get their company cash flow and expenditures per month down to, can you get it down to 15 lines or less? If you are spending constantly in your company, depending on what kind of company you might have, whether it's a manufacturing company or a service-based company, you're going to have different expenditures and cash outlays. However, you want to, as quick as possible and as soon as possible, squeeze your financial operations of your company down to about 15 distinctive transactions that are impacting the cash and the profitability of your company. it will make a world of a difference. Now, if you're starting a company for the very first time and you don't have any of these three, the balance sheet, the income statement, or the cash flow statement, if you don't have those set up, that's okay. So I'm gonna say that, right? If you don't have these things set up, it's okay. However, you cannot create a realistic and an actual factual financial narrative if you don't have these things in place. And some of you might be saying, well, I don't have any sales, I don't have any clients, so I don't have the need for these. And the response to that is absolutely not true. If you don't have customers, beautiful. Now is the time to set these 3 documents up, because as they start to come in, you will know how to place the dollars coming into your company into these financial sheets correctly. Now, you should have some type of track and management system to do that, but if not, and the Excel sheet is where you are, that's okay. There are some templates. I'm not certain if BACP provides them, but if you are in any business, other training course, you should be able to see it in Microsoft Excel. They come right pre-programmed templates that are in the system that you can use and you can adjust information for. I think there is a question in the chat, so I'll pause for a moment for questions. Or is this just a some people with slow internet, and that's no problem. Okay, again, if you have a question, you can feel free to drop it in the chat. But so to create a financial narrative, you absolutely have to have your balance sheet, your income statement, and your cash flow statement, because you're going to be pulling data points from all three of those to craft this message. Now, what are financial performances in your company? Those three financial forms, your balance sheet, cash flow statement, profit and loss statement, they are going to help tell the overall financial health of your company. So the financial performance of your company is a general measure of your company's overall financial health over a given period of time. You can create a financial narrative for a future forecasted projection. So you could go 3 years out, 4 years out, 5 years out. You can also just do, hey, I just want to do my financial narrative for this quarter. What's going on this quarter? What's going on this first half of the year? Or now we're in the second half of the year. What is the company's financial health as it is right now? How are we using the assets that we have in our company? Assets being dollars, inventory, machinery, and equipment. How are you using those assets in your company? And how often are you updating your company's financials? Now, the company financial update is a critical thing. So I have mentored hundreds of entrepreneurs, and some are, when I ask, well, do you have a company budget? They say yes. And I say, okay, well, let me see it. And they say, well, it's not written down. Well, in my opinion, it's not a budget then. If it's not written down, it's just an idea. You got to get it on paper, because at that point, it's going to come from out of your mind onto your hands. It's going to give some crystallization of how your company is doing from a financial perspective. Now, as a potential solo entrepreneur, you probably already know your top 3 clients, how often people are coming back, what presentations or demonstrations of your product or service you have in the pipeline, or those things that you've done. That's great that you have this activity, but how does that activity translate into actual financial performance? That's what you want to absolutely be able to track. But updating your company financials, that can happen from week to week, month to month, quarter to quarter. It absolutely needs to happen at least once a month. But if you're checking your bank account, sometimes people are checking their bank account every day, hoping for something great, but you haven't had any conversations with clients. So where are your revenues coming from? You want to make sure that you are being intentional about how you're updating this information and when you're actually updating it. But at the end of the day, the financial performance, you're measuring your company's overall financial health for a given period of time. And this is going to tell you, are we stable right now in this industry? Some of you all might have seasonally based operations. Well, if you know your peak season is coming up, do you have the pre-season financial readiness to get through that season of activity? And when that season is over, right, your financial narrative, did you make enough out of that peak season to get you through the off season? That's a key indicator that your financial narrative will be able to tell, and that you having updated financials will be able to see. And when you plot it out, you'll be able to see your company's growth cycles and your company's slower cycles of time, but you'll be able to see that financial performance. That is a key element for you to have in mind as you're creating your financial narrative. Your revenue, your money that's generated from your normal company sales operations, it is the top line of your income statement. So, by definition, revenue is money generated from normal company sales and operations. It's the top line of your income statement, and it figures out which costs are subtracted to get to your net income. Now, there's no real fun way to show revenue, but revenue, a formula there, right there in the middle, average sale price times the number of units sold. Pretty simple, right? If I have 50 purses that I want to sell at $10 a purse, well, 50 times 10, that is my expected revenue. And it's gonna come up on your profit and loss statement or your income statement. So it's gonna be the top line. Where is your revenue coming in? Now, for my lovely visionary entrepreneurs, how many revenue streams do you have coming into your one company? I want to be clear about this because I have seen entrepreneurs and founders blend companies. Okay. If you're blending your company activity, so let's say you are a consultant by day and um, let's say a baker by night, okay? Unless you are doing consulting to bakers on how to be a more efficient baker, your consulting company needs to be separate, your banking company needs to be separate. Those revenues generated are going to be separate. Unless you have done a legitimate bridge of service for your company, your consulting company is one company and it's going to have the revenues associated with that. What might the revenues for a consulting company look like? One, your actual service and time of the consultation. Two, maybe you have some reports that are generated from that. So that's a deliverable. That's an additional revenue stream. Maybe you're doing workshops. That's a third revenue stream from a consultant perspective. And let's say you are doing a training of, hey, here's the train the consultant. So I just gave 4 revenue streams for a consulting company. That is totally different. Those are your company sales operations. That's totally different from you. Those are your generals in that scenario. But let's say you are operating your consulting company in a property that you own and you have decided to sublease space to someone. That is an additional revenue, but it's not your primary revenue generator for your consulting company. You are a consulting company, not a landlord company. And however, your landlording rent that you're receiving from someone who you might be sharing the space with, that's okay. That can be identified as a revenue. But the key takeaway here is do not blend your companies from a revenue perspective. But this financial narrative is going to help you distill how many revenue line items you have coming into your company. I just gave an example of 4 for a consulting company. It can spread out. Why the financial narrative is so important as it relates to your revenue is you'll also be able to see which of those revenue line items are more profitable than others? Which ones are bringing in more income than some of the others? Because it's going to allow you to focus on those different areas more intentionally and maybe make the decision to cut some of the areas away. As I mentioned, I had a day spa for 10 years. When we first opened, we had a trifold menu of services that we did. Everything, you name it, we did everything: body treatment, waxing, hair removal, relaxation, massage. We didn't do hair like from a hair care perspective, but we did all the other things, nail services, etc. Well, by the time we came down to the last year of company operations, I had made so many adjustments and feedback and what services were being utilized and which ones weren't, that we were able to distill our services down to the back of a business card. It might sound harsh, right? How you go from a three-page menu down to the back of a business card. Well, in doing that, we became more profitable. Because instead of spreading out and saying, hey, we have to control inventory for all of these 50 services, we have to make sure we have space and service providers for all these different services, we were able to say, hey, we're going to cut our inventory costs. We're going to cut our overhead costs of so many things if we just focus in on these top 5 services that have been requested, and we do those the best that we can do, and we become top in that. And it allowed us to become more profitable. It increased our retention rate of our customers simply by adjusting our revenue streams. Just because you know how to do everything, you all, doesn't mean you should be doing it all. And what you want to do also is make sure that you're maximizing the revenue coming in. It's going to allow you to focus on a handful of revenue streams that are more profitable. And I encourage people, go back to your current, what are you selling? Are you selling too many things? I see it mainly in a lot of um I see, oh, we have a couple of questions. I'll jump to that in a minute. But we see, I have seen people with like 15 ideas of revenue. And I'm like, yeah, but one, you don't have enough time in the day. So let's start there. But I see revenue line items and SKUs really go off track if there is a product that is being made. So anything from like personal care, hair care, if you're making products, don't have 50 different product lines, right? Have one or two, the top sellers, distill those down, and you'll be able to track your inventory and your inputs about that. Um, so there's a question as for those who have customers as they're creating their financials. The best thing I can recommend for you, if you have customers and you've never developed your financials, your balance sheet, your cash flow statement, your profit and loss statement, start. And I know that sounds like, okay, yeah, but where do I start? You start by saying, hey, I need to understand from a financial position where I am. You got to open up your books. And by your books, I mean open your bank accounts. If you have a credit card that you're spending within your company and your business bank account, that's going to be the first place you look. And actually, some business bank accounts will give you budgeting and financial templates that you can use. But you wanna absolutely start by, even like I said, even if you go into, like, Microsoft, Excel, I think it's the one that has it for these sheets. You're gonna pull up your balance sheet, your cash flow statement, your profit and loss statement, and you'll be able to start inputting the categories. It's very self-led, these documents are. So you wanna go ahead and start doing that as soon as possible, and then put yourself on a time frame on when you're gonna have it complete. A lot of people can get overwhelmed by financials. Do not. You already know where you're spending your dollars. This just gives a formal process of you to track it. So, that's the revenue. So revenue, keep your company separate and your revenue items as condensed as possible. That's a takeaway for your revenue. Fixed costs are another thing that you are able to have more clarity on within a financial statement. The fixed costs are costs that are going to be the same regardless of whether you're selling a good or a service, whether it's selling or not. okay? Rent is a fixed cost. It doesn't matter if you are selling shoelaces and no one bought a shoelace, the landlord still wants his check. Electricity doesn't matter if you sold shoelace or not, ComEd still wants that utility bill paid. So, fixed costs are things that are going to impact your business whether you make a sale or not. Insurance, if you have a brick and mortar and you have that liability and property insurance, doesn't matter whether someone comes in the door or not, that insurance premium has to be paid. Salaries. Now, this one is a tricky one. Okay, so business math is a beautiful thing, right? Whether you are making sales or not, if you have enough money in your operating budget and operating expenses, you are paying salaries. But just like rent, whether that person is performing or not, if they are on a salary, they still want their check. So, in that way, right, people often tie salaries and things to revenue, which makes sense. But you also want to make sure that even as you are applying for funding, when it comes to operational expenses, and they say, hey, you can use X amount of these dollars towards operational expenses. Well, fixed costs are operational expenses. And so your salary falls over into that category. But if you have not been paying yourself, let me just put a pin here. There are several ways you can compensate yourself, even though you are not generating high amounts of revenue. But if you are generating revenue, there's different ways that you can come to your compensation. But if you are just starting and you don't want to go through the how do I want to put this gently? There are a lot of steps and processes and procedures that need to be in place to run payroll and actual W-2 payroll. There's the payroll itself, there's the payroll taxes, and then there's the payroll processing fee of the system that you might be using or the company that you're using to process that. Those are all costs that are going to fall into this. I put it over in the fixed cost category personally. Your accountant or whatever might advise you to put it someplace else, but it's still a fixed cost. But maybe you can't pay yourself a full $100,000 salary at the moment. That's okay. Well, make yourself a contractor and make sure that you're getting compensation. The reason I point out compensation must be distinctly identified for you, whether it's a 1099 contractor, whether it's a W-2 employee. And that W-2 can be salary or hourly, it doesn't matter. But what that's showing, again, the stakeholders, lenders that you're talking to, investors that you're talking to, one, is showing that you have intentionally thought of the compensation and the foundation of your team that's making your company work and grow. That's a critical part. If you don't have the right team in place, is your financial narrative showing when you can actually start adding team members? Or is it showing how much salary you might be able to bonus someone or actually give yourself an increase or a raise? So, salaries are critical. If you don't have salaries or compensation in your financials, you absolutely need to put it there. Lenders do not like to see that you are not even getting compensated out of the company that you are running and operating. And logically so, right? If you can't even compensate yourself, what's the guarantee that you'll be able to service this debt that you're asking to take on from them? So that's the pin and the takeaway from salaries. But these fixed costs are going to be in your financials, whether you like it or not. It's the cost of doing business. You need to, again, condense them down as much as possible, negotiate to rent leases that you are comfortable with, insurance, make sure you have the proper ones in place. And this is everything from property insurance to medical insurance for your team, if you're able to offer that, and even insurance for the executives within the company. So, those are some key elements that you want to be mindful of as it relates to fixed costs in your financial narrative. Your sales forecasting is going to be critical. Let me see if there's any questions in here. Let's see. Um, Oh, I love it. Yeah, no, no one wants to keep doing everything. You definitely need to delegate. Okay. So comment on rent for a remote business working from home. How is this differentiated? Okay, I want to make sure this is clear. So if you are working from home remotely for another company, that's you being an employee. But if you're saying you actually run your business from home, then and you pay rent, those are two very distinct activities. But if you are a home-based business paying rent, there is a formula where you basically would take a percentage of the amount of space in your home that you're dedicating to your company, and you can claim that as rent contribution from the company. But you want a paper trail, right? If I am working from home and right now I'm in this little cubicle at my office, well, if this was the only space that I used for my business on a regular basis, I would have to calculate square footage. How big is this cubicle? What does that equate to out of a part of my overall rent? And that's what I would, from the business, write a check, right? Paper trail. Here's rent for the month of June to, I don't know, whoever is on the mortgage or the rent. You're writing from your company to the rent holder, here's a portion of the rent, and then that'll be a good paper trail. Um, how many business can one individual have? Oh, you can have as many businesses as you like, Sarita. However, my question back to you would be, how many profitable businesses can you have? Because you can have, there's no cap, if you will, on how many businesses an individual can have. What that is going to do, though, is spread your focus across, I see it says 10 businesses. Why you would have 10 businesses going at one time is beyond me. That is definitely a conversation that we need to have individually. However, my recommendation would be focus on the one that's most profitable, that then you can put people in place so that it can run without you being there. Even my company, I build my companies so that I don't have to be there every single day to make it run and be effective, because I have delegated out and built team. But there is no legal recourse for having multiple companies. How do we give ourselves a 1099 as an S corp, but we haven't made any money on a consistent basis yet? Great question, Derek. So there, you can give yourself a 1099, but you would want to base it on the revenues that are coming in, right? So maybe it's a percentage of sales that are coming in. That's an easier way to do it, or a percent. It's a certain percentage that you feel comfortable with. There is a book. I don't know if you all have ever read. It's called Profit First by Mike Michalowicz. It's a wonderful book that shows how you can actually set in compensations for future payouts, um, just flipping the formula for profit and expenses. Um, you've seen online software that assists companies with completing financial statements. Would you suggest using one of these? Alana, I hope I pronounced this correctly, but yes, I would absolutely. If you've never, well, I'm always gonna say try a free before you do a paid, because you wanna make sure, one, that you understand the data that you have to put into your financials. If you don't even know the elements that need to be on a balance sheet, a cash flow statement, or a profit and loss statement, then you're kind of like walking in the blind. So first, you want to go and understand the categories that need to be on each one of the documents. And then you want to activate a software or some process and system where you're able to track that. Um, I produce the market overseas and I need to focus because it is a large market. If you found a market overseas that works for you, that's great. I want to make sure, again, though, if you have multiple, you can have, again, you can have multiple companies. I don't know if you're structuring them all under like a main entity? Is this like LLCs? I don't know what they are. I can't just answer that one kind of like in the blind. But if you have a market that generated other business opportunities for yourself, it's absolutely nothing wrong with that. All I am saying is that you want to be mindful that you are not spending so much time trying to pursue another revenue stream in a different business that your main business starts to suffer. That's always key. You don't want to get distracted in, oh, here's an opportunity, let me do this. Here's an opportunity, let me go here. You want to focus in on one opportunity, make sure that you have exhausted all possibility with it. One of the biggest things I advise people is that running a company is a marathon, it is not a sprint. It is a repetitive marathon. You want to make sure that you understand the intricacies and the operations of your company thoroughly and that it is producing revenue for you. That revenue that's produced could then help you create another company. However, when you start to create this new company, how is that first company being impacted? But we can have a deeper conversation off this. Let's see, here's one of the last one. What is the best way to go about sales forecasting for a new conceptual business that isn't yet generating sales, predicting units of sales for a boutique plant shop and garden center? Wonderful question. We're going to talk about that in a moment. And someone starting a video game. That's awesome. Okay. Sales forecasting. We're right here on time for that question, right? It's the future sales projection. It's also going to take into account historical data as well as market. So you got three elements here in your sales forecast. What do you hope that your company can make given the current market trends, as well as where the market has been? And by the market, I am right now talking general market that you're going into. However, now you want to distill that down into your company. What do you want your company to do? And I'll use, since it's in the chat, a boutique plant shop and nursery. I think that's what it was, a plant shop and nursery. Um, and I'm sorry, you guys are dropping questions in Q&A as well as in the chat. But if you are predicting the units of sales for a boutique plant shop and garden center, I'm gonna just use Stephanie's example here, right? Well, the so many things that you can go into to analyze there. But is this seasonal? If so, okay, you can adjust it. You can look at it from a financial sales forecast and projective seasonally. What you can do it by the types of plants that you plan on selling. But either way, what is your company's overall revenue goal out of it, right? What's the profit that you're trying to extract out of your company? The historical data, right? If you yourself have never opened this company, where are you going to get the info? You're going to look at the data sources in your industry for the nursery by region. You can look at the census data information. You can look at Bureau of Labor and Statistics. You can look at the NACES code for your industry. You can look at the SBA table size table standard to see what that industry historically has produced from a revenue perspective. And then you want to see, well, also, well, where is the market going? Fresh air and new plants and all of that is a major part of human existence, right? And survival. But what type of plants are you planting? That's going to be interesting in the market that you're looking at. And you're going to look at all three of those elements, right, to create your sales forecast. So I'm really making this up out of the blue and on the spot. But from a nursery perspective, you want to open a nursery targeting building, growing um, a specific like lavender, right? Lavender bushes. Well, one, who are you selling it to? Are you selling it to individuals who want to extract lavender essential oil? There's a whole market there, right? So your sales projection for your lavender farm, how much essential oil can be extracted out of one lavender bush? How many lavender bushes are you selling? How many ounces of it, essential oil extract are you able to generate? And then what do you want to sell it for? That's a sales forecasting model and activity. You want to do that essentially, and this is why some people don't like doing forecasting, because you can do it literally revenue line by revenue line, or you can do it holistically, company overall. So ultimately, you want to start easier. It's easier to just go, hey, here's my whole company. I want to sell in the nursery space. The trends in the industry show that people are buying more house plants, and this particular house plant can grow in X amount of days, and we can deliver it, ship it, whatever. Um, but at the end of the day, when it comes down to this sales forecast, the three major elements that you want to have in place are historical data from the industry as well as from your company's perspective. Because again, a sales forecast can happen at any given time in the life of a company. But when you create it, you're going to stick to it. So, but then also the market trend. So you are going to take um, different professional sources within your industry that are reputable, that you can see the trends of the market, and you're going to create this sales forecast narrative. Now, the sales forecast can stretch out. Again, you can do it by sections of time, but whatever you're going to do, you're going to stick to that. The whole point of these exercises is that you have a guiding light, a North Star, a set goal that your company is working towards, and that as you start to veer off of it, you can come back and say, hey, is selling this plant getting me towards this market share that I put in this sales forecast? Is selling this workshop gonna get me there? Is selling this particular activity gonna get me there? And is it worth it? And by worth it, I mean, is it worth the time, the investment? Is it actually going to generate the number from a future sales projection expectation? Are you going to actually achieve that? So sales forecasting, again, you want to make it time bound. We're going to look at a 3-year sales forecast. We're going to look at a 1-year sales forecast. We're going to look at a 6-month sales forecast. But you'll also be able to get down to a monthly and weekly and daily sales forecast. My customer success team here at Busy Boulevard, they have a daily sales goal that they have to hit, which is tied to the monthly, which is tied to the quarterly, which is tied to the annual sales forecast of our company. It keeps them on track. They don't have to come in and wonder, well, what's my goal? What am I working to do? Um, but what that then starts to do is create historical data for us internally to start tracking, right? And so now we can now look month by month, year by year comparison of our sales forecast. And this is also going to help us see our sales cycle. So again, you can see how these different exercises tie together to continue to create this financial narrative. I'm going to pick up a little pace. Wait, let's see. Chat questions. Um, mm, mm, mm. Well, thank you so much. Um, yes, there is individual coaching. I'll tell you guys about that at the end here. Q&A on this side. I've seen online software. Okay. Are executive bonus plans a line item or expense for the business, or is it another report? Ooh, Kimberly, that's a good question. So, it's a it's a combination, and I would say it depends on the type of company you have as well. So, LLCs versus corporations, they have different reporting metrics for that. But okay, so preparing your financial narrative. Now, obviously, no shame. You can find business goals and metrics. You want to make sure you're tracking your sales, your invoices, your payments. Are you using a financial software tool? We talked about that briefly earlier. If you are not going to pay for one, which again, I mean, it's just me personally. I'd rather try it first before I buy it, and that's okay. But you can use Google Sheets or Excel. You're going to have to put some calculations in there. Your business plan is going to come into place. And obviously, you want to have a daily operations management system. So, Busy Boulevard, our software, we do have a price optimization exercise that subscribers get access to in the platform. But we take you through a personal budget and a company budget. And then I like to say the bookend of our system, you have a budgeting exercise, and then you have a scheduling exercise. Those are the bookends of our software for the daily. But in between, it tracks price optimization, customer retention activity, and customer engagement. It controls your schedule. It looks at reports, and it crafts all of this messaging. I'm sorry, it crafts all this data and holds it so that you can actually present it in a unified way as you're analyzing what's going on within your company. So that's really quick about Busy Boulevard. But now, how do you craft your financial narrative? So here's some simple instructions. You can screenshot this or whatever, but simply to start, you choose a season, whether it's a quarter or a term of time, and you write a financial narrative for your company using the prompt that we're about to show you, and you include the relevant key terms in each section. So the first part is your present summary of your financial narrative. Here's where we presently are. The second part is your company goals. Here's where we want to go. Third, here's where we've been. And then fourth, here's how we're going to get to this number. Very simple. Where we are right now, where we hope to go, where we've been, and the expectation of how we're going to get where we're going. Very simple. Now, what does that look like in real life? So we're going to use another beauty example, Brianna's Beauty Bar. And these are at a glance facts. It's an aesthetics-focused personal care service company. It operates on the west side of Chicago. It has a menu of 12 offerings centering around skincare, eyelash extensions, waxing, and includes specialty services for children. They're preparing a financial narrative to show for their Q4 performance call with investors. And your Q4 or quarter four goals are to increase revenue with a new custom facial offering. They want to keep their cost of goods the same or within a 10% margin increase. And then goal quarter one for the next year is to increase revenue by 15% by offering service pairings. And this is going to take a 3 to 6 month projection. So as you can see, very simple. Who the company is, where they operate, what do they do, what are they creating the financial narrative for, what's the use case for this, and who are they going to share it with. They're going to share it with their investors at a Q4 performance call. So a performance call, they're going to talk about their past performance, where they are presently, and where they're going. And they're specifically crafting this narrative around some Q4 and Q1 goals. So the end of the year, the beginning of the next year. So a 6-month time window, right? Well, technically, yeah, 6 months. The last 3 months of the quarter, was it December, November, was October, November, December, last 3 months of the quarter, and then January, February, March, the first 3 months of the next year, Q1. So Q3, Q4, 3 to 6 month overlap. And again, I bring this up because there's going to be overlapping seasons in there, and there's overlapping year in there as well. But that's the facts about the company. You all should each be able to distill down the facts of your company just this simple, right? Where do you operate? What are your top menu offerings? This one, in this case, listed out the 12 offerings that they have, and why they're preparing the financial narrative, who they're going to share the financial narrative with, what time frame the financial narrative is covering, and the goals. So what does that look like? Now you're going to write that financial narrative using that prompt structure, again, showing the relevant key terms in each section. So the financial narrative, the present summary, which we just showed, her business goals are those Q4 goals. The past performance, we'll show that in a moment, and then her future goals. So what does this look like when you pull it all together? So the Brianna's Beauty Bar Q2 through Q4, so quarter one up to quarter four, 2024, and we did it as a historical example. The past quarterly performance, when Brianna's Beauty Bar was focused on increasing revenue in Q1 through Q4, the company earned $30,000 and assumed $10,000 in marketing expenses, resulting in a $20,000 profit. So They had a goal, they met that goal, but it took $10,000 to hit that $20,000 profit goal. So they earned 30, it cost them 10 to make it, they netted 20. Simple math. And I like to tell people, as long as you can add, subtract, divide, and multiply, when you start working with your finances, you're good. Now, if you can't do those basics, find you a class and get comfortable with the basics of addition and subtraction and multiplication. The reason that's so important, if you can't manage your company where it is currently right now from a financial perspective, you won't be able to manage where you envision it going. So you have to get comfortable with it. But there's the past performance. The future goal in Q1 of 2025, the beauty bar is going to focus on increasing the revenue by 35% of the Q4 goal, right? So this is we want to increase 35% in the new year from what we had in the last year. And an example that I did here, um, again, they did 50,000 for the year. The example that I just talked about only talked about um, Q1 through Q4. So this is quarter one, quarter two, quarter three, stopping at quarter four. So when you add in quarter four, they hit $50,000 in profit for the year, and they wanted to increase it for the next year by 35%. So what is 35% of the 50,000 which they earned in the previous year? That's 17,500. So when you take that 50,000 and add the new percentage increase that they want, their new goal for the year is 67,000. So they took their past performance calculations and understanding. They added a little bit on top to push themselves further, knowing that they're going to offer these new packages to help get there. So they want to, in the new quarter, here's the goal right here. In the next 3 months, they want to surpass the 67,500. Now, what does a past performance sound like? During quarter four of 2024, Brianna's Beauty Bar was focused on increasing revenue. The company earned $50,000 and assumed $5,000 in expenses, resulting in $45,000 in profit. When Brianna's Beauty Bar was focused on increasing revenue in quarter one through quarter three of 2024, the company earned $30,000 and assumed $10,000 in marketing expenses, resulting in $20,000 in profit. And in Q1, quarter one of 2025, Brianna's Beauty Bar will focus on increasing revenue by offering service packages. So that's a past performance report summary. And you see, we're only talking, let's see, that's 4 sentences. 1, 2, 3. 3 sentences, pretty heavy sentences, but they have taken all of the past performance and distilled it down into 3 sentences. And that's part of the report. And that's what they would, let's see, again, and they're going to share that out. So they're going to share it out, that 3-minute statement that was just created. They're going to share it to their investors. We already heard that that was an investor call that they wanted to put out. And it's so critical that you share this information with those who've invested in you, whether it's a bank, whether it's a private investor. That's going to give them confidence in putting more money into your company from an investment perspective. Because for Brianna to offer these new service packages, it's going to create an increase in inventory, it's going to create an increase in marketing, and it's going to create an increase in potential staffing. So why would I take this performance statement to a bank? Well, hey, I'm gonna show you this is what we've done. This is what we plan on doing. And in order to do that, we're gonna need this injection of cash. But you can see that we have been very intentional with the spend historically. We know what we're going to do with it in the future. And we also have guardrails, if you will, in place. We know how much we are trying to earn. So we have a checks and balance system in place. And so that has a whole different conversation and presentation with a lender or an investor versus, oh, well, I think I need some money because I want to do this thing, but I really haven't thought it through. They're gonna tell you, "Go politely," right? Politely, go figure it out, and then come back and let me know when you're ready. You don't wanna waste people's time, your own especially, but you don't wanna waste the audience member's time. You wanna be able to create a clear, compelled, decisive statement about your company, and that's what the financial narrative is. Um, and again, it's telling by distilling down your key company metrics, your company's plans, and your company's forecasted activities. So that financial narrative, we just showed it. It take a lot of data points to get to it, but it's going to distill down into one easily digestible presentation. And it matters. It absolutely matters because for you as a business decision maker, you have to know, where is my company currently, right? The president does the State of the Union addresses all the time for the country. Well, you need to do the State of the Union for your company, and that's your financial narrative. But it's going to make it easier. Again, like I said, it's easy for you to make business decisions. Do we need to cut costs here? Do we need to increase spending here? That narrative is going to allow you to be able to make those decisions more easily and more intentionally and more profitably. But and then lastly, it's going to highlight the decisions that you need to make. So it's going to influence investor decisions. It's going to help shape your company's performance and perception. It will show up in the team's work. So it will show up in your work, making you more laser focused on your company's objectives. So that is our presentation this morning. Would certainly love, I don't know how many of you all are on your phones or whatever, would love some feedback there. I can send this, the recording, I guess when you watch it, scan the QR code differently. But you can absolutely keep in touch with me. Here's my number and contact information. And then for the next couple of minutes, let's see, we'll jump into some questions. Let's see here. Um, so grateful. Okay, let's see. Oh, textile learners. I totally understand. Okay, hold on. So the class we are wait, there's so many. Wait, everybody's typing now. Hold on, hold on. Okay, so glad growing rapidly. Okay. Yes, you definitely want to make sure that you are prepared. The financial narrative helps you be prepared to take advantage of industry trends and opportunities as well. I want to absolutely point that out. So, for instance, let's say there's a new product that's coming out that could benefit your company. Well, do you have the dollars to really do it? You might have some dollars in reserve, but in your financial forecast, what are you preparing for? So you don't want to haphazardly spend dollars. Um, can we integrate this info into a capability statement? So there's certain elements of this that will show up in a capability statement. Your historical performance can show up on a capability statement, and you can pare it down to one or two sentences showing your industry expertise, if you will. So I would look at it that way. Um, Yes, we can actually, this class is an in-person class when it is performed, and email me and you can get the link there. The statement is only including marketing expenses. What about others? Oh, yeah, no, your financial statement, your financial narrative are going to outline the things, the key performance indicators and business objectives specific for you. So the financial narrative is very fluid. And again, you can build it around a particular brand strategy. You can build it around a company expansion. And expansion can look a different, it can take on so many different ways. A company expansion could say, hey, we want to offer this new service. We want to offer this new product. We might want to expand our team, or we're expanding our location, or we're expanding the size of our office. So a market expansion can take on company expansion can take on different meanings. And so your financial narrative is going to be fluid for what you are analyzing at that point in time. Um, the recording again will be on the YouTube channel for BACP. And would I recommend any banks for people with bad credit but are trying to start a business? I would recommend that you do not talk to a bank first. Banks are traditional banks are cash flow lenders, and your credit will come up as a personal guarantor. And so you definitely need your credit in place for that. And although there are some banks, make sure you email me. I do have a list of banks. They will work with you with the lower credit score, but you really want to have all these other things in place as you're having that. And again, a financial narrative around what created that credit score issue as well. Let's see, the main competition for my business are small houseplant shops. Those revenues aren't publicly available. What are best resources for finding sales data in this situation? So this is where your NACES code, this is a great question. This is where your NACES code is important. I don't know how a retail, I don't know if you're considered horticulture. I don't know how what your like NACES or your North American industry definition where it falls. You want to make sure you find that for your particular industry. So it's retail, something to do with plants. I don't know if it would be in agriculture because it's not for human consumption. But whatever your NACES code is, you want to tie that in, and it's going to drill down and give you some steps to do it. Again, you can email me and we can have a conversation offline. Yes, this is a brief statement of a business plan. Yeah, so it's not a business plan in the example of a full um, SWOT analysis, market analysis, etc. It really is another way for you to look at your company from a financial lens, which is where everyone should look at their company, right? It's one thing to have a wonderful product or service. But if you cannot maintain your company's operations internally on a regular basis, it's going to be hard for you to get that into the market. And it's going to be hard for you to get additional financing. And I'm going to say this, your first form of funding your company is going to be your own injection. Maybe you have some friends and family who've invested in it, but it's also your customer. We didn't really talk about the sales strategies of making sure this forecast comes to life. But if you don't have a specific plan for your sales and how you're going to attract customers and retain customers, that's where you absolutely want to make sure you've had a focus. So you want to make sure that you're looking at that from a different lens. What is your company revenue goal for the year? That includes your compensation. So those are some ways to look at it. Um, do we recommend keeping my technology consulting company separate from my staffing company? I would keep it separate unless it's a technology staffing consulting company, right? If you but if you are a technology company and you're doing technology consultations, and you have a staffing company, I don't see a connection unless the staffing company is staffing the individuals who can execute the technology that you are encouraging people to define within their company. So that's the connection I would see there. But unless there is a clear connection, I would absolutely keep them separate and realize that is what's going on. Um, Thank you so much. Please the link for better building credit and personal business. Again, make sure you send an email with some of these questions and reference this BACP workshop. Full disclosure, I do have a consulting fee per hour, but it comes with deliverables after that. And then the workshops are at a cost, but again, deliverables, hands-on, parking, lunch, etc. But it has been an absolute pleasure to talk with you all. I hope you have some good, oh wait, we got some questions over here on the other side. Um, yeah, hopefully you all have had some questions answered. And this has made pursuing a financial narrative a little less intimidating. I like to make sure that I can share complex financial models in a more friendly way. The workshops and opportunities like this allow for that narrative to continue to grow. But again, at the end of the day, you want to make sure that you are okay. I'm gonna write this down. Charles, you're not following instructions. You got to email me. So I'll write it down so then that way, as I see it come up, I'll reference where it's from. But at the end of the day, you want to make sure that you are really laser focused in on one company. One of the things that I've seen over the course of time is that individuals, they feel like their company isn't producing the revenue that they expected, and so they jump to the next one. Well, the truth is everything takes time. So if you're not being honest with yourself about the time commitment that it's going to take to generate revenue within your company, entrepreneurship is going to be a hard journey for you. If you can't focus in on your company, and I'm going to use a 4 year time span, for example, and just this one, laser focused in on one for 4 solid years, you'll see difference, you'll see progress, you'll see movement. If you think that whatever product or service you've created or you're bringing to the market is that impactful, prepare yourself to realize you think it's impactful, but other people don't know you exist. They don't know who you are. And so there's this brand awareness time that you have to overcome, the subject matter expertise belief that you have to overcome. There's a lot of obstacles that you have to overcome to get clients into your company. Once you get them there, it is going to be imperative that you are able to keep them there because your business is going to operate primarily with the top 20% coming in and generating that revenue and staying. The 80% are still there, but it's going to be 20% of your client base that is really generating and moving the needle on your company. But please, please, please hear me well. Do not jump. I've only been doing this for a month and I haven't had anything, so I'm moving on. Well, you're just starting at base one in the next thing. You have to give it time. I used to tell this to people all the time, especially in the beauty industry. It's easy to communicate it in the beauty industry because it's really a easy growth. And I'll use waxing, which was our number one service, for example. You can't wax something that's not there, right? You can't service a client that's not there. Well, how do you get the client? You have to show them that you have this service or product that you offer, and you have to deliver that in the best way, exceeding their expectations to make them want to come back and continue to do business with you. That's your client retention. Are you treating every client like a rock star when they come in? How are you going? I don't say above and beyond. Clients should be satisfied. They're not always right. There's that saying, the customer is always no, the customer is not always right, but they should be satisfied in doing business with you. And then they will start to do their own version of social media marketing your company as well. But as it relates to building your company, get comfortable with your finances. That is key and critical for growth, especially if you've started this company to help stabilize your personal household finances. There's a direct correlation. You can see study on top of study. If your personal finances are in disarray, your company finances will be in disarray as well. It is a natural progression because it's just your mental around finances. So it doesn't matter what um, environment it is in, it is your personal affinity towards or away from your thought about financials. You can do this. Hard stop. You are more capable than you know, and you have already been doing it. The question is, how can you pull it into a more formal process that it's easier for you to understand and easier for you to follow? And I'm going to say this. You can do the same financial narrative exercise in your personal life. So, for someone who said, well, I don't have customers yet, how do I create this forecast? Well, start with your household. Your household is a business. What's the income in your household? Where are the expenses? Where do you have to spend the money? Okay. And what's left over? That's the same exercise you're doing in a business, but instead of a paycheck coming in, it's customer revenue coming in. And instead of, oh, I have to pay, rent to my landlord, you're paying rent to a landlord, right? It's just not a housing situation. It is housing your business. So there's a reason why they consider entities people, right? Because you're still going to have these same personifications that happen within the assessment of your company. So that's where I'll leave and stop. But if there's any other questions, please, please, please feel free to email me and stay in touch. Again, that's not it. The presentation will be, if it's not, it'll be on the YouTube channel by BACP. And I look so forward to working with you on your journey and making sure that your 2025 ends how you want it to, and your 2026 goes beyond what you can expect. Thank you so much for your time this morning. And Geraldine, I will hand it back over to you.
Well, thank you so much. We're getting tons of thank yous. This is great. This is great in the chat and the Q&A. So I want to thank everyone for coming today. Noelle, thank you so much for this great information and for giving the entrepreneurs such great, again, thank you. It keeps they just keep coming in. I love it. So wishing everyone a great weekend and stay cool. I guess it's going to be a hot one. Take care, everyone. Have a good one.